Morning and welcome to another great week. How was your weekend? I hope everybody had a wonderful one. Today is the 9th of October 2023, and I just want to share what is happening in the market with you, like I always do since I joined this group a week ago or so, and I believe we've been benefiting from one or two things that's been happening through my videos. And good training yesterday. I saw Miss MD MD's video, and at least he's helping you guys too, and that's a great thing. I urge a lot of people to join more so you guys can learn. Excuse me, and learn a lot. All right. Yeah. Let me remove that. So what's going on? We saw this whole thing happening last week Friday, especially this movement. And this movement was because we had NFP, you understand? Non farm payroll always happen every first Friday of the month, and that's why as a trader you need to get yourself used to the news because we have technical analysis, we have fundamental analysis, and the fundamental analysis goes with the news, you understand, the macro economy, you understand what is happening in the economy. So sometimes if you want to be a full trader and not just a signal trader, and you want to take full advantages of whatever you're doing in the market, you need to get yourself used to fundamentals too, you understand. But most importantly, whatever that happens out there will always come to the charts and present itself, and you can analyze the market. You understand? So I remember on Friday I was in profit, and this market started turning around. I saw the movement. I didn't even know that was this because I didn't check. You understand? And the moment I saw my signal that this is going to go against me, I left the market immediately. Then it was later I discovered that was the news. So you could see that even with the news, the chart is still going to show you the same thing. It's just that it might move faster. So before you react to it, it might be too late. That's just one thing when the news, breaks out. So you need when the news break out. So you need to be careful and all of that. But what are we going to do today, and what do we need to get ourselves with today is that you can see after the news, the market has been ranging and creating a kind of indecisive um, movement to know probably are we going up, are we going down. But if you're a technical analyst or you know how to analyze the market very well, definitely you must know okay, even though the market is going up or going down, there's possibility of this movement or that movement. That's what I want to show you this morning. Let me bring this in quickly so I can analyze what I'm expecting. And plus, it's a new week. We all need to make sure at least we gain some money. All right. Since we have this thing moving yesterday, first of all, we need to understand before you take a trade, there are some things you need to know first. That's why traders are losing money. There are three things you need to know first before you take your trade. You understand? Maybe we're gonna do lessons about that through MD. You understand? There are three things you need to know first before you take a trade. Those three things are very important. If you're a trader and you don't know all those things, either you understand resistance, support, or whatever, you're still gonna lose money because those things shows what the buyers and the sellers are doing in the market, you understand. So we're still going to talk about that someday, but now let's get to today's business so this video is not that long. No, I haven't identified those things I was saying. Now we want to check, are we buying or we're selling? We already have this movement that created a structure, you understand. It created a candle structure, and the candle structure break 27,750 thereabout, and now it turns to now form what I call a three spikes. You understand? We have one, two, three, and when you have a three spike, there's possibility you have the four around this point. Then for the market to continue, or you have the market come down to where it's starting from, which is this point. So if the market dumped to 27,100, 27,000, I won't be surprised because we've got a spike. But if the market fails to get there too, I won't be surprised because we have a three spike here, which is one, 2, 3, and definitely we expect it to go back to 28,600. So you can see we are in the middle of break it or make it, and that's why you can see this ranging has been happening. Ranging don't just happen in the market, it's due to buyer and seller are indecisive, so they're fighting who's going to win. Okay, it's a buy, no, it's a sell, it's a buy, it's a sell, and one is going to win at the end of the day, and the market will move that one. Now we have 1, 2, 3 spikes. We expect the market to create the number 4 because we have 1, 2, we have 3. We expect the market to create number 4 around this zone, because if you draw it like this, that's how you know how to do to calculate where you need to get in. We have our 1, we have our 2, we have our 3. Now we're expecting the 4 to be around there, but now the market continue to break above. So what are we expecting? We're expecting probably the market should shoot above this point, because the market needs to pass wherever that is coming from. That's one. But number 2, now since now the market has broken this point, now we have 1, 2, 3 again creating itself here, and whenever I would say the latest one is what we need to go with, you understand, because the latest one will later turn to the big one. And you can see now we have the pullback, and we have 1, 2, 3. We're expecting our 4 here, and that's why you see the market created a kind of structure here but couldn't move ahead. Now come down to break our what will I call it, our 2, because this is 1, 2, and the moment it breaks it, that means definitely we should be looking for a signal for it to come down to this point. But now, because we have 1 here, we have 1 here, the market is at the middle and we do not know where it's going from. But by analyzing the market, definitely you can prepare yourself to know where the market is going. So now let me zoom it in and show you. We have the market now created where we'll have a sell structure now. This is 1, this is 2, then we have a breakout. And whenever you have a breakout, you see, and that's another thing you need to learn in trading, you don't just take a buy or a sell even though you have a signal, because if you take a buy and a sell when you have a signal, it might be where you need to turn around that you're taking the sell. It might be where the market is going to turn around that you're taking the buy. So I always advise people, and that's why you don't see me trading anyhow, because I don't see the reason why you trade all the time and you lose your money. If I take one trade, I might leave it for a day, 2 days. You understand? Because if I say, okay, let me close and enter, it might be where I'm supposed to buy, I'm closing. It might be where I'm supposed to sell, I'm closing. Now I'll be giving the exchange my commissions or my, what do they call it? The service charge. You understand? Yeah, it's commission. Or let me say, yeah, I think it's the commission they charge you for you placing your trade through them. You understand? Because if you close a trade at break even, then you're still losing the charges. You're still losing some money. You understand? So what do we need to do? We need to be watchful, because now we now have a proper structure forming from this end. You understand? A proper what structure forming from this end. And when you use your Fibonacci from here to where we have the breakout, it's right inside where we need to sell back. And that's why you see the market gets to this point and coming back down. You understand? You can see it's right inside where we need to sell back. But what is happening inside this one again, we have what we call the spikes again. And I tell you, the latest one is what you follow, because the latest one is not going to bring meaningful to the older one. The older one bring meaning to the previous one as well. So now we have another spike forming right here, and we can see 1, 2, 3, 4 is coming down. If this should come down to this point as our 5, I would not be surprised. Even to create another spike, right, I will not be surprised, because we have 1, 2 successful breakout here. And whenever you have a successful breakout, you understand, definitely you're going to see the market pull back to around 0.681 or 6, is it 683 if you're using Fibonacci? 0.618, excuse me, and 0.786 Fibonacci. And that's what has happened. And that's why you see the market, what am I going to call it, respect the zone. But now, because the movement was supposed to go up, but because of the successful breaker is respecting the zone, then for it to invalidate it, we need buyer and seller to fight, and before we get a place. But down to what are we expecting today is very simple. This is what I'll be doing. We've created our 1, 2, 3, 4. We're expecting this to break down, and then anytime the 4 is created, you need to watch out for the opposite reaction, which is the 4 has created a sell, but now we have the rejection again. So that means we're expecting to take a trade there for our 5 to happen. So you need to, let me tell you something, when you're trading spikes, I told you the best thing to do is to learn how to trade spikes because it gives you profit. Imagine you get into the trade right here. You understand? Because you already have your 1, you have your 2, and you have your 3 with this movement. Then if you take your trade right here, already you're making some money. You get me? You make about 133 points. But why I don't trade all this thing? Because the point is too small. You understand? I don't like taking trades of 200 points, 100 points, because they're still going to take charges and all of that. So what's the sense of me taking the trades? I rather wait when the big movers is going to happen, then I jump right into the trade. So what am I expecting now? I'm expecting this to continue coming down. Any structure that will be broken back, either a trend structure or a candle structure or a reversal structure, I am going to buy immediately. I am going to buy immediately and use the necessary way to place my stop loss as my stop loss. So where am I looking to buy today? I'm looking, because it's creating this candle for me now. Using the candle structure, I'm going to place my buy here. If we should break here, I'm putting my buy and I'll put my stop loss down here. Do you get it? If I get into the trade right here, because this is another one right here, you can see we have a small how am I going to call it, structure right here. If you get into the trade right here, your stop loss must be here. So you need to understand those things too, because sometimes your stop loss are very close to where you place your trade, or you don't know how to use your stop loss. That's why you lose money too. You need to know when you get into a trade at some point, you need to know where your stop loss needs to be. Sometimes your stop loss is not even at your support, because we have what we call the minor entry, the major entry, the breakout entry. So many entries are there. So you need to attribute each entry with where the stop loss needs to be. And if you do that, you might have, okay, let's say for instance, you get into the market right here using the minor structure. Do you get my point? Your stop loss is here, which is 270 points. You can see, even though you are in the market has not come down to your stop loss. So you are still good with that signal if you're using that. Then if you are the type that you didn't use it, you're waiting for a structure to create itself, and it ends up creating a 4 spikes or a 3 spikes or a 5 spike, it's still the same thing. Now we have 1, 2, 3. This is where I'm expecting to sell, but that's to create a structure for me to sell. This is the structure right here, and when I sell here, I'm expecting the market to not come back to this point, because if it should come back to this point, I'm expecting to leave the market. Or if I see a counter structure against it, you don't even need to argue that. Once you see a counter structure, it's just like the market is a buy signal. The moment it turns to sell, you don't need to still stick to your buy. You need to change immediately. And that's why I'm having my buy. But why have I not been taking trade? Because I can see we're having a struggling between buyer and seller. So I need them to decide where they want the market to go. Then I follow their footstep. And that's why I told you, and that's why I explained this, that we already have a 1, 2, 3, and we're expecting the market to move past 28,500. But in moving upward, another spike created itself that is expecting the market to move back down to 27,100. You understand? Inside that again, we have another minor struggling itself, and that's why we're having this ranging. Whenever you see market ranging, it's not just ranging, it's because buyers are holding it down, sellers are holding it down. Nobody wants to agree for each other, but one is going to win because one order is going to surpass the other, and the moment that happens, you see the market going to that direction. And how do you know? Is by analyzing the chart. So now what am I preparing myself for right now? I'm preparing myself for a proper breakout. You understand? But I'm getting into the trade early because I have my own strategy using a candle structure. So now, do we have a sell structure? Yes, we do. 1, 2, 3. Market has come to respect the sell zone back, and it has come down but fails to continue, because whenever you have a sell zone, first of all, what do I tell you? You wait for a signal. Now we have a signal here for us to sell, which is around 28.7 whatever, but now market is coming down, they're not breaking it, it's turning it into spikes. Do you get my point? Whatever is turning into spikes, you forget about the structure, you follow the new one, just like we've forgotten about the spike here, we'll move to the spike here, we'll forget about the spike here, we'll move to the structure here that broke out. Now we're forgetting the structure, we're moving into this. You can see it's simplifying it into smaller case. And if it's going to get bigger too, it starts from there going up. These things you need to understand it. There's a lot of things attributed to it. So even though I try to explain it in a simple language you won't understand, I just need to explain the strategy for you. But for you to understand how the strategy is happening, you need to understand, number one, what is called 3 spikes, 4 spikes, 5 spikes, candle structure, reversal structure, trend structure, how am I going to call it, Fibonacci using 0.618, using 0.786, and all of that. You understand? You need to first understand that before you can digest this signal or understand it and do it yourself. But for the fact that you don't know all those ones, I'm just explaining the market for you so you can understand when and how you need to get into the market. So that's what I'm doing right now. So now where am I getting into the market? I'm going to get into the market right here. The moment the market is about to break this point, I am getting into the market, and my stop loss is going to be here. Do you get my point? My stop loss is going to be here because I'm using the minor structure, the minor candle structure signal to take this trade. I must respect what the higher one. So whenever I'm using a minor structure, I don't put my stop loss below the next candle. I put it right here. So if this activates for me, definitely I expect it to continue shooting up, and if it comes back down and create another structure, I'm just going to leave the market. That means they are still fighting, still battling for who is going to win. You understand? And you need to respect that. You don't trade with your emotions. You don't trade with maybe or no. You need to go with what the candle is showing you. And that's what I have to show you today on the chart. And I believe we're going to make money. If the market now creates a better structure or finer or good one, definitely I'm still going to tell you. But right now, which one are we looking at right now? We're looking at this. This is the one I'm basing my signal on right now. Other ones are there. I'll let this finish. I'll move to this one, finish. I'll move to the next one. That's how you trade. Move from smaller to bigger to the larger picture. You understand? Then again, larger picture to the smaller picture to the tiniest picture. That's how you use technical analysis, so you can understand all this noise, spikes, move up and down that is going on in the market. So I'm placing my trade right here, and my stop loss will be somewhere around there. So if this one should trigger, it's going to put me in, and I expect it to go up. And if it fails to come down again, that means we are now having what we call the continuation of this one. And sometimes I tell you, you might wait for it to create a structure, to break a structure. And if you want to wait for it to break a structure, you'll be waiting to get into the trade around 2700. But I like to get in early, because when I get in early, it minimizes my loss. You understand? And it gives me a lot of profit, and that's what I trade all about. I like to use minimum of maybe 50 points, 100 points to enter my trade and make 1,000 points and make 500 points, even sometimes 2,000 points, if the signal and the structure continues going nicely without any counter structure coming to it. I don't want to make this video long, but this is what I have to share with you today. Enjoy the rest of your week, and till the next video I'm going to drop. Peace out.